Persistent to acquire Nagarro, AI powerhouse with $2.9 billion revenue in the making. Persistent Systems has announced one of the biggest and most transformative deals in its history by signing a business combination agreement with Germany-based Nagarro. The proposed transaction aims to create a global AI-led digital engineering powerhouse with approximately 46,000 employees and an annual revenue run rate of nearly $2.9 billion United States dollars. Unlike a typical acquisition announcement, this transaction is structured through a voluntary public takeover offer for all outstanding Nagarro shares. Persistent, through its wholly owned subsidiary Galaxy Germany Holdings A, has offered €81 per share in cash to Nagarro shareholders, reflecting the company's confidence in the long-term strategic value of the merger. The offer price itself has attracted significant attention because it represents a premium of nearly 140% over Nagarro's undisturbed closing share price before the announcement. It is also around 94% higher than the company's 3-month volume-weighted average price, making it one of the most attractive takeover premiums seen in the European technology sector. Such a high premium usually indicates that the acquiring company sees considerable long-term strategic value rather than focusing only on short-term financial gains. Persistent believes combining both businesses today is faster and more valuable than trying to build similar capabilities organically over many years. An equally important aspect is that the deal already has strong backing from Nagarro's leadership. Both the company's management board and supervisory board have publicly supported the transaction and intend to recommend that shareholders accept the offer after reviewing the final offer document. Persistent has also secured an important advantage by signing a binding agreement with Lantano Betiligovan GmbH, the investment vehicle of Nagarro's largest shareholder. Through this agreement, Persistent will acquire approximately 21% of Nagarro's equity, subject to regulatory approvals. Adding further confidence, members of Nagarro's management board have also declared their intention to tender their own shareholding into the offer. This level of insider support significantly strengthens the probability of the transaction reaching the required acceptance threshold. For the acquisition to proceed, Persistent must secure acceptance from shareholders representing at least 50% plus one share of Nagarro's outstanding equity. Once this condition and regulatory approvals are satisfied, the company expects the transaction to close during the fourth quarter of calendar year 2026 or the first quarter of calendar year 2027. From a strategic perspective, the merger appears highly complementary rather than overlapping. Persistent has built a strong reputation in AI-led engineering, cloud transformation and enterprise modernization, particularly across North America where it has developed a substantial customer base. Nagarro, on the other hand, brings significant strength across Europe along with deep expertise in digital engineering, enterprise resource planning, customer experience platforms and AI-driven enterprise transformation. The company also maintains strong relationships across automotive, industrial, consumer, telecommunications and financial services sectors. When combined, the two organizations would create a diversified global technology company operating across more than 40 countries. The merged entity would employ over 46,000 professionals, including more than 37,000 employees in India, around 3,500 in North America and nearly 3,000 across Europe. One of the biggest advantages of the transaction is geographical diversification. Persistent currently derives the majority of its business from North America, but the merger substantially increases its European presence, creating a more balanced revenue profile and reducing dependence on any single market. The combined organization is expected to generate more than 1.7 billion United States dollars in North American business while creating a European business exceeding 600 million United States dollars. This broader global footprint enhances the company's ability to serve multinational enterprises seeking integrated digital transformation partners. Artificial intelligence remains another major driver behind this acquisition. As enterprises increasingly invest in AI-enabled automation, cloud modernization and intelligent software engineering, technology companies are under pressure to build larger delivery capabilities with specialized engineering talent. Persistent believes that combining both organizations will significantly strengthen its AI engineering capabilities. The merged company will possess broader AI talent, stronger engineering platforms and deeper relationships with hyperscalers, independent software vendors and frontier AI laboratories. Scale has become increasingly important in the global IT services industry. Large multinational clients often prefer technology partners capable of delivering complex transformation programs across multiple geographies while maintaining consistent quality standards. The proposed merger positions Persistent to compete more effectively with larger global technology consulting firms by expanding both its service portfolio and delivery capabilities. The proposed merger positions Persistent to compete more effectively with larger global technology consulting firms by expanding both its service portfolio and delivery capabilities. Instead of focusing solely on engineering, the combined company will offer end-to-end solutions covering AI, cloud, ERP, customer experience, data modernization and enterprise transformation. Another notable benefit lies in industry diversification. The combined company will generate more than 500 million United States dollars of revenue across banking and financial services, healthcare and life sciences, and technology, media and telecommunications sectors while maintaining strong positions in industrial and consumer markets. Management has also emphasized that the merger is designed as a growth strategy rather than a cost-cutting exercise. Persistent has publicly committed to preserving Nagarro's leadership culture, protecting existing employee agreements and creating broader career opportunities across the combined organization. This message is particularly important because large technology mergers often create uncertainty regarding workforce reductions. In this case, management is highlighting expansion, capability building and long-term growth instead of immediate restructuring. Persistent has arranged committed financing for the acquisition through Barclays. The company believes leverage levels will remain within conservative limits while expecting debt to reduce meaningfully over the following 2 years through operating cash generation. Following completion of the acquisition, Persistent also intends to pursue the delisting of Nagarro from the Frankfurt Stock Exchange in alignment with Nagarro's management. However, the company has clarified that it does not intend to enter into a domination and profit and loss transfer agreement for at least 2 years after closing. For investors, the proposed acquisition represents a defining moment in Persistent's evolution from a fast-growing Indian IT services company into a truly global AI-led digital engineering leader. The company has already delivered 24 consecutive quarters of sequential revenue growth and generated approximately 1.7 billion United States dollars of revenue during the last financial year. Nagarro contributes approximately 1 billion euros of annual revenue along with strong customer relationships across Europe, including 4 of Europe's top 5 automotive manufacturers. Integrating these capabilities could significantly enhance Persistent's competitive positioning in several high-growth industries. Like every large international acquisition, execution will remain the biggest challenge. Integrating thousands of employees across multiple countries, harmonizing technology platforms, and preserving organizational culture require disciplined management over several years rather than a few quarters. Investors should therefore monitor regulatory approvals, shareholder acceptance, financing execution, and post-merger integration progress before evaluating the full long-term impact of the transaction. While risks naturally exist, the strategic rationale behind the combination appears stronger than a traditional scale-driven acquisition. Overall, the proposed Persistent Nagarro combination has the potential to reshape the company's future by creating one of the world's largest AI-led digital engineering firms. If successfully completed and integrated, this deal could become one of the most significant milestones in the history of India's global technology services industry.